Looking to get funded? Smart Prop Firm is your go-to platform for exclusive deals on the top futures prop firms. Earn up to 5% cashback and enjoy payout protection in the event your firm doesn't pay you out. Use code SMART at checkout. Click the link in the description to maximize your trading benefits. Today, my friends, we're going to be going over my favorite entry model, my absolute favorite way of getting involved with price. It's called the impulse shift. We're going to be breaking down very simply how to spot it, what it is, the theory behind it, as well as a bunch of chart examples at the end. Also, how I was able to automate it into an indicator that automatically alerts you when these impulse shifts are created in order for you never to miss these high probability trade setups again, as well as monitor a bunch of different assets without driving yourself crazy. Just make your life a whole lot easier. But without further ado, let's get right into it. So what are impulse shifts? Well, first of all, they are signs of reversals. We use impulse shifts to confirm an order flow shift on the lower time frame. So on this example, you'll see price shifting from a bearish state as it comes into that higher time frame point of interest, which is that green rectangle, and shifting to a bullish state as it's creating a bullish fair value gap to the upside. Now, remember that order flow lesson, that order flow video before this one, we're always looking at the most recent side of order flow, the most recent legs as the relevant PDa arrays. So once we have that new bullish order flow leg to the upside, price has officially shifted from a bearish state to a bullish state. And it's called an impulse shift because we want to see this shift happen impulsively. What that means is quickly, very aggressively, very sharp. Now, there are some variations of impulse shifts, and for that reason, I have placed them into tiers, ranking them from the best to the worst. And I'll break them down shortly, but let's first understand the exact theory behind an impulse shift. So again, impulse shifts are a signature, they're a sign that show how order flow is shifting through fair value gaps, because that is how you read order flow. You can't have order flow without fair value gaps. So with an impulse shift, we actually want to see fair value gaps coming into our higher time frame point of interest. We want to see that displacement into the higher time frame PDa array, because what that is it's just manipulation. Those fair value gaps coming into our higher time frame PDa array are manipulation. Those fair value gaps are a trap. A lot of unaware traders out there who are unaware of the higher time frame levels that we are coming into, potentially they don't read the higher time frames, or a lot of momentum traders, a lot of breakout traders see all that displacement and continue to trade in the direction of that. They see that fair value gap and think it's a sign that price is going to continue moving lower off of that. But all that fair value gap ends up being is a trap, because why would you ever short a fair value gap that looks like this as we're coming into a higher time frame point of interest that we can potentially move higher off of? It just makes no sense and is super low probability. So when we see a sharp manipulation into a higher time frame point of interest, we want to be on the lookout for a sharp displacement out. We want to see the new order flow start pointing higher. We want to see a bullish order flow leg in the event that we come into a support level discount array. Again, a discount array is just a bullish fair value gap, whereas a premium array would just be a bearish fair value gap, just an area of resistance. Just want to make sure we're on the same page here, okay? Because you'll hear me use those terms a lot. Discount arrays and premium arrays. Again, discount support, premium resistance. So again, we want to be looking for that new order flow leg displacing higher. That new order flow leg would start showing new fair value gaps going in that new direction. We confirm that impulse shift, and essentially we have confirmed a potential reversal and an entry. So for example, this is what an impulse shift would look like with actual candles. This is what you would want to see in price. You'd want to see a manipulation fair value gap coming into your higher time frame fair value gap, followed by a displacement, an impulsive shift out right there, a bullish order flow leg out of your higher time frame PDa array. There is your impulse shift, manipulation, and displacement out. You can enter on this impulse shift. Now, I know what some of you might be thinking right here. What about market structure shifts? Don't we need to see that with displacement in order to confirm a reversal? I'm here to tell you that no, you really don't need that. The fair value gap, the impulse shift, is more than enough, because the fair value gap will tell you more about the story of price, about where it wants to go, more than a market structure shift ever will. The fair value gaps show the intention of what wants to happen next. They show institutional sponsorship in a move. So when we have a market structure shift and the market structure shift doesn't have a fair value gap, can we do anything with that? No, there's no fair value gap. So then what's the point of a market structure shift if all we're really looking for is a fair value gap in the first place? And credit to Ario for helping me realize that. That was a huge revelation for me in my trading, so shout out to him. So now let's take a look at some impulse variations, as they do come in various tiers. So tier 1, Rapid impulse shifts. A rapid impulse shift can be identified by the fair value gap in and fair value gap out of the higher time frame PD array overlapping. And this is the highest probability tier of impulse shifts. So when you have that manipulation fair value gap coming into your higher time frame PD array overlapping with the fair value gap coming out, that is extremely high probability. You may know this as a BPR. If you studied ICT before, this is what he would refer to as a balanced price range. This is my absolute favorite setup. Go study it, go back test it, look at your charts, see just how well these play out. So a tier 2 impulse shift is still very high probability. It's not like it's trash, it's not like it's bad. It is still very high probability, right? So the way you identify is just a normal impulse shift that can be identified by the fair value gap coming in and out, but they are not overlapping perfectly. So that manipulation fair value gap and that displacement fair value gap are not touching each other at all. They're just completely not overlapping. Now, as we go into tier 3, it is lower probability. This is when we only get the FVG out of the higher time frame PD array. So we just see that displacement. We just see that bullish order flow leg out of our higher time frame PD array. We are lacking that manipulation fair value gap, but we are still seeing institutional sponsorship and an intention to want to push higher. So while it is still valid, we are missing a key component, which is that manipulation. Overall, a lower probability tier of impulse shift. I will still trade one of these. It's just very dependent on how the actual displacement forms out of the higher time frame PD array. Like if we still see a V-shaped reversal with a very sharp V turn, right? Instead of a U-turn, we can literally just call it a V-turn because that's what we want to see. If we just get that very sharp displacement higher, I will be open to taking that. And lastly, tier 4 right here, the lowest probability of impulse shifts. So a lowest probability impulse shift can be identified by a sting into the higher time frame PD array, followed by a consolidation and then a fair value gap out of the PD array. This is the lowest probability tier of impulse shift because we are not seeing any sort of intention to want to displace higher. We aren't seeing any sort of V-shaped reversal. Something to note, something to write in your notes, is that the more time price spends in a fair value gap, the weaker and weaker it becomes. The less likely it's going to pan out, and the more likely price either just consolidates or fails that fair value gap and moves lower. Whenever price comes into a fair value gap, we want to see quick reactions. The strongest fair value gaps will get rejected very quickly and price will not want to spend too much time in them. So setups like these, I would recommend avoiding entirely. Now let's get into the automation side of things. So with the power of custom indicators, we have automated the entire process of using impulse shifts for getting trade entries. So it begins with higher time frame PD array selection. So the entry alert indicator has a selection tool that allows you to select the higher time frame PD array where you actually want to receive your impulse shifts alert for. So all you would do is use the selection tool to mark out the higher time frame PD array you want to watch for your impulse shift. You can even pick your entry timeframes. You can modify it. It is auto-selected to the proper timeframe alignment. So just to recap that real quick in case you have no idea what it is. From a monthly level, you're looking for a daily impulse shift. From a weekly level, you're looking for a 4-hour impulse shift. From a daily level, you're looking for a 1-hour impulse shift. From a 4-hour level, you're looking for a 15-minute impulse shift. From a 1-hour level, you are looking for a 5-minute impulse shift. From a 15-minute level, you are looking for a 1-minute impulse shift. So once you select that higher time frame PD array using the selection tool, like in this example right here, we are highlighting a daily fair value gap. You will have this look like this. This is your indicator automatically monitoring your higher time frame PD array, waiting for your entry function to form your impulse shift. All you have to do is mark the higher time frame area that you are interested in looking for entries out of, and the entry alert indicator will send you an instant alert as soon as a valid impulse shift occurs. So for example, let's say you use the entry alert indicator on a gold 15-minute fair value gap because you want to look for a 1-minute impulse shift. Once that 1-minute impulse shift occurred, you would get a notification like this to your phone via TradingView that would tell you 1-minute impulse shift is forming from a 15-minute IRL. Which is 100 times better than the built-in TradingView alerts that never tell you when a real confirmation occurs. Only tells you when a certain level has been hit. So you have no excuse to miss trades any longer. And on the chart, it would look like this. So we highlighted the daily fair value gap right here. Remember, off a daily, we're looking for 1-hour impulse shifts. You would get this on your chart. Once this bell appears, that is the indicator signaling to you that it has sent the alert and recognized an impulse shift. And what the indicator will also do is it will draw it out for you. So as you can see, it drew out the rapid impulse shift right here. Remember what that was. That is a tier 1 impulse shift in which the manipulation fair value gap coming into the higher time frame PDa array is overlapping with the fair value gap displacing away. And here it is properly identified by the indicator, as well as changes in state of delivery. It also does that too, alongside a few other entry functions, which we will go over in other videos. So this is not just for FVG traders. You can also utilize this tool if you trade order blocks. And we do plan on adding IFVGs in the next update. Now, with all that being said, let's take a look at some chart examples. All right, so here we are on ES daily chart. Remember our previous video all about order flow. We're always trying to align ourselves with the higher time frame order flow. And over here, thanks to the order flow indicator, we are getting our daily bullish order flow leg all marked up right here, giving us higher prices, giving us a bullish bias right here. If we want to reach for these highs, these all-time highs, we can look for it off of this daily IRL to ERL. So once price comes into this daily, I am looking for longs. Now, if we look closely at the PM session right here, we'll notice a 1 hour bullish order flow leg right here, pointing higher. We have a very obvious target right here at previous week's high, also just that daily ERL. So if we want to look for an entry inside of that 1 hour fair value gap, all we would do is select the entry alert indicator, and we're going to highlight that fair value gap. And it first starts off with highlighting the inner price, which is just the high of that fair value gap, the outer price, which is just the end right here, and the creation, so the confirmation candle, just the third candle that created that fair value gap. So this candle right here, we click this and we get this pop up, and we want to make sure we are looking at this IRL time frame and select the proper IRL that we are looking at. So this is a 1 hour IRL we are potentially going to look long out of. So we're going to click hourly. And since the focus of this video is impulse shifts, we're going to deselect all the other entry models and just focus on the rapid impulse shift and the impulse shift. And if you take a look over here, they are auto applied to the proper time frame alignment, as you can see right there, monthly, daily, weekly, 4 hour, etc., etc. But you do have the option to customize it to whatever you want in case you want to demand more confirmation. So let's click apply, and there is our zone. So now let's drop down into the aligned time frame, which is the 5 minute, and take a look at what happens inside of that 1 hour fair value gap. Right there, we get the impulse shift marked up by the indicator and alerted. So when you see that bell, that is the indicator understanding that we have an impulse shift. I just sent you an alert to your phone, your watch, wherever you wanted it. And that would be your signal to lock in, look at your charts, make the decision if that is a high probability setup that you want to take. You ultimately have the last say if you do want to take a setup that you get alerted. Again, not every single alert is going to be perfect. It really does depend on how well you can get a higher time frame bias and identify high probability areas that price may want to move higher from, because your alerts are not going to work if you're marking just the wrong areas. Remember, you have to manually know and understand what you want to see price retrace into and expand away from. You can't just put an entry alert indicator zone on any level and take the first alert that it gives. It's not going to work. So that's where understanding order flow in the previous video does factor in heavy. But anyways, I think this is a great entry right here. So if you wanted to get involved in this, you would set your limit at the fair value gap high right there. Stop loss would go at the bodies right here of the swing low that created that impulse shift, specifically at the bodies, because when you have a really big wick, that is very unrealistic to place your stop and target so far. I mean, even right here, we can't even get 2R in the frame. So when the wick is very large, I tend to put it at the bodies right there of the swing low and then just target a static 2R just like that. And that would be beautiful. Let's see how that played out. Eventually getting your 2R right there. I actually want to rewind a little more in price on this same exact chart and same exact day, just back to the morning session, and show you how you can use the entry alert indicator in a bit of a more unique way. Instead of just marking it out at IRLs and fair value gaps, you can actually also use it in a way to get entry alerts at liquidity sweeps. And this is how. So you'll just enable the entry alert indicator right here. And first of all, the idea behind why I would want to mark out this low right here is because, well, we have been bullish. We are in this daily context right here. Coming into the New York AM session, what typically the 9:30 open likes to do is it likes to manipulate. It first likes to go down to then go up. So what level can we first go down to then go up? I would say it's these lows right here, and these are just the London lows. When we're trading indices, you should know that these session highs and lows are such crucial levels that have marked out on your chart that they love to get manipulated. They love to get swept to then reverse and target opposing session liquidity. So over here coming into the day, I thought to myself, all right, if we want to continue pushing higher, what level can be manipulated to? These London lows is what stuck out to me. So over here is where I would want to put my entry alert indicator on. And what you would do with this first line that we have to plot, and this is what's called the IRL start inner rejection price right here. It says it at the bottom in this blue box. We would mark the actual swing point that we want to see get swept. So the actual London low right here, that is where we input our first line. Now the second line, this is not a mechanical rule I have. I don't have an exact point when you want to put it for the actual liquidity sweeps. You just want to make a slight level below it. Anywhere like here, like here's fine, here's fine, here's fine. Don't overthink this. You just want to make a zone beneath that liquidity point to let the indicator know that it is in this general vicinity. You want to look for an entry alert out of there. So right here is fine. And on this third point, the IRL confirmation candle, we again click the exact swing point right here. And we'll get this pop up. And again, you can just mark this out as a 1 hour. We know it's not IRL. We know it's a liquidity sweep, but again, it's a bit of a unique way you can use it. And again, since this video is all about impulse shifts, we're just going to rock with that. And let's click apply. So here you're on the 5 minute, and let's move forward in price towards the 9:30 open and see what that does for us right here. Waiting for that volatility to kick in. Since this is the ES and this is an indice, we understand that at the 9:30 open every single day, there is a huge injection of volatility. So let's see what that brings. And right there at the open, we have already manipulated into this level, this London low, and we have seen displacement higher, giving us a 5 minute impulse shift right here. And this bell indicating to you that the indicator has sent you an alert the moment this happened. And right here, you want to lock in and take an entry right here. Now, there are a few ways you can get involved right here, just based on how this formed and how this is technically a breakaway gap. You are familiar with that. Again, it's just the third candle closing above the second candle's high and expanding above it. You can just mark it by that with the expectation that price may not want to retrace down here. Is that guaranteed? No, we can still easily do that and move higher. But just based on this and based on what usually happens, that would be the expectation you hold. And then you can just target a static 2R right there. That's valid, although it wouldn't really be something I would do in this situation, considering how far your TP ends up right here, even going above previous week's highs. So I would sacrifice in this scenario, getting left behind and looking for a more favorable entry so that I don't have to be targeting so far up. So you can still set your limits at this 5 minute impulse shift. You can set your stop loss at this swing low that creates that impulse shift, and then just target a static 2R. And this is what that would look like. So let's see how this one played out. Eventually hitting 2R, eventually taking Asia highs, and I think we will also take out previous week's highs right here based on the example we saw earlier, and hitting all the draws. Here we are on our next example. This is the gold weekly futures chart. And again, based on order flow, the order flow indicator is telling us that we have been in bullish order flow. We have this most recent bullish order flow leg, swing low to swing high with fair value gap in the middle. This is our IRL to ERL. If price comes into this weekly fair value gap, we can look for higher prices. Now, if we don't want to stare at this all day and just literally look at the charts when price is ready to go, we can use the entry alert indicator to save us so much time. So we would implement that right there, click it in this box right here, and we would mark out first the IRL start inner price, which is this opening level for the fair value gap. And then we mark out the outer price, which is basically just the high of the first candle right here that creates the fair value gap pattern. Remember, it's 1, 2, 3 candles that create a fair value gap. And then the final confirmation candle, boom. And want to make sure this is a weekly fair value gap because this is a weekly IRL. And since this is an impulse shift video, we're going to focus just on that. So let's take a look and click apply. And there is your zone right there. Now, there's actually a very important step that I haven't mentioned this yet. In order to actually get your alerts, you have to go down to the time frame, the lowest time frame you want to receive your entry alerts from. So from a weekly, if you want to look for a 4 hour, you're going to go on the 4 hour time frame. And while you are on the 4 hour time frame, you're going to go hover over the entry alerts indicator right here and click these 3 dots. And there's going to be an option that says add alert. Since this is replay, you don't see it. So I'm actually going to show you exactly what it would look like on a live example. So we see this 4 hour fair value gap on ES right here, right? So let's mark that up using the entry alert indicator. Let's set that to a 4 hour and let's click apply. I want to go to the lowest time frame I want to look for a potential entry from, right? So on a 4 hour, I could look for a 5 minute order flow chain as well, 5 minute unicorn. Although again, we're not going to get too deep into that, but I'm just telling you how this works. If you want to get 5-minute alerts, you can go down to the 5-minute. You have to go down to the 5-minute in order to set those alerts. Because if you just go to the 15-minute and you set your alerts right here, you're not going to get your 5-minute alerts. So what I mean by setting your alerts, you're just going to go over here and you're going to hover over these 3 dots that say more. You're going to click that, and then this is the button that says add alert on Surpaple entry, and you would just click create just like that. But if you want to receive the 5-minute alerts and the 15-minute alerts, you have to do this on the 5-minute, same exact process, and click create. And if you want to make sure that your alerts were set, you can just go to this clock right here in the right column of TradingView, and you'll see that your alerts are active right there. Now, if you have the order flow indicator toggled on, which has marked this level automatically alongside the overlapping level right here, you might see this and think it's kind of messy, which I totally agree. It is not very neat right here. It's all kinds of things meshing together, that gray and green. It doesn't look nice on your chart right here. I get it. So what you can do is you can literally, and this is what I do every time I put my entry alert indicator on, delete it. It's gone. I like to just have the order flow indicator right there for the cleanest possible charts. And you can confide in the indicator to keep the alerts on once you set them, even if you do delete it. So that is a neat little tip right there if you want to keep your charts super clean. So let's get back to the gold setup. Remember, this is weekly IRO to ERO. This is the weekly context. We're on the 4-hour chart, and we're looking for a 4-hour impulse shift out of here. And let's see how this plays out. So right there is that 4-hour impulse shift, as well as the rapid impulse shift. So that's that tier 1 impulse shift, where the manipulation for value gap and the displacement for value gap are overlapping. So this right here would be your entry stop loss at the swing low, and you can target a static 2R from there. Now, you don't have to target static 2R. That's just what I prefer to do. You can also target the actual context high right here if you're feeling adventurous. Anyways, let's see how this played out. Eventually hitting context highs, and we get all kinds of entry models right here, but we're not going to get too deep into that. That's for the next videos. Hopefully you guys found this video insightful and learned more about my favorite entry function, the impulse shift, and saw the power of the entry alert indicator and how it can save you so much screen time and allow you to never miss setups again. In the next video, we're going to be going over the unicorn setup, which is one of the strongest algorithmic entry functions you will find alongside the impulse shift. The unicorn is also quite a powerhouse, so we're going to go over that as well. So turn on those post notifications so you don't miss the next video release. Again, guys, you can literally try out the indicators, all of them, for just $1. It's literally $1, cheaper than a coffee, cheaper than a freaking chocolate chip cookie at Subway. I actually think it is the same price as a chocolate chip cookie at Subway, but come on, I think this is healthier for you. But anyways, you get access to the order flow indicator, the entry alert indicator, the SMT indicator, the risk manager indicator, the navigator indicator, the Discord alert bot, and a full indicator trading course with over 10 hours of models. Again, it's not just telling you how to use the indicator, it's going deep into the concepts behind it, and you're gonna learn a whole lot, I promise. It's a no-brainer. It's $1. You can literally cancel after a week if you don't like it, which I don't think you will. I think you will love it, but come on, try it, see if it's for you. That being said, if you found value in this video, I would really appreciate a like, a comment, a subscription. It would really show me you guys appreciate what I'm doing here and would inspire me to make more content. So thank you so much for tuning in. Love you guys. Peace out. Until the next one.